In this video, I want to talk about diversification that is destroying your returns and what you can do instead. I see many people invest in the stock market. They don't have the confidence to have a few stocks in their portfolio, so they diversify away. So they have many stocks in their portfolio, and I think they are safe, and I don't think they are. I don't think they are safe at all being diversified. It will be a great cost for them, a great pain. Okay, average for the average investor, the retail investor, individual investor, concentration is better because you are a retail investor, individual investor. You don't have the time like a professional money manager. You don't have the time to monitor everything. You don't have the time to monitor 200 stocks. 20 stocks is, I would say, the maximum you can have. The first point is owning 20 stocks or more feels safe, but it kills performance. For those who are new to the channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade and I have achieved a performance of 25% per year. I did not get my 25% per year for almost a decade diversifying with many stocks. I have built my track record thanks to concentrated bets, smart bets, calculated bets when the odds were in my favor. So 20 stocks to 30 stocks, 50 stocks, 100 stocks can feel very safe. In case something blows up, you will have the remaining 99 stocks in your portfolio, but it completely destroys your performance. And you have a great quote from Warren Buffett saying, diversification is a protection against ignorance. Diversification is not protection, it's dilution of performance. For example, you do some research on the company you like. You say, okay, let me open a position, let me buy the stock. How much of your portfolio will you buy? 10%? I don't think so. If you like diversification, maybe you will invest 1%. Okay. Do you have a lot of conviction in your pick? Yes? Okay. If you are right, and if this stock doubles, the 1% will go to 2%. Wonderful, you just made a 1% alpha. What if you just bought 10% of your portfolio? Yes, you can have the risk if it goes down, but if you really know what you're doing, if you have conviction in your pick, if you buy a great business available at a great price, normally you have more odds of the stock going up, right? If you know what you're doing. Again, if you have the knowledge and the skills, if you only invest in quality businesses, quality management teams, great valuations, if you have this clear checklist and you just invest in top tier opportunities, normally on average, they should go up. So normally on average, it should be a mistake to have a 1% portfolio allocation. Normally, on average, you should increase the concentration of your portfolio. The more you know, the more concentrated you should be. And sometimes I receive calls with potential clients. They show me their portfolio heavily diversified because they admit they don't know what they're doing. They're just gambling with stocks. And you are watching this channel of serious investors. We are not gamblers. If you are a gambler, please leave this channel right away. You have other channels that will do the work. But this is a channel for serious investors that want to outperform the market. They want to build conviction with a strong portfolio that will make them sleep well at night and generate generational wealth. Because you invest the good way, the Warren Buffett way, for decades. If you do this, you cannot fail. And I've seen too many people with a diversified portfolio. They think they are doing great things, but actually they just don't know what they're doing. If you invest in 100 stocks, you don't have the time to monitor 100 companies, to listen to all the conference calls, to read all the earnings reports. Because you are a retail investor, you already have a job. You have children. You don't have the time. You don't have the time. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. Pros invest with focus and high conviction in just a few great businesses. You can look at the best money managers of our time. Not everybody, but most of them have a concentrated portfolio. The first hedge they have is they have analysts, so they can monitor many stocks at a time. And still, if you look at the best business managers, the money managers, they have a concentrated portfolio. Look at Chris Hone from TCI. Maybe he has 12 stocks, 15 stocks maximum. Look at Dev Cantesaria, 10 stocks. You can look at the past performance of Warren Buffett and Charlie Munger. Well, in the past, during their prime, concentrated portfolio. Once again, you can look at Monish Pabrai, concentrated portfolio. Once again, you can look at Bill Ackman, concentrated portfolio. You can look at Guy Spear, concentrated portfolio. All the big gurus have the same mindset. You don't want to diversify away from your best performers. Just only pick the great businesses, the best stocks, increase the quality of your holdings, and just keep them. Don't diversify your portfolio with some hedges, with some small irregularities. It will actually cost you a lot to diversify. It will cost you time. It will cost you performance because it will drag your returns down. And it will cost you in transaction fees. Every time you buy, every time you sell, you have to pay a transaction fee to your broker, right? So if you just invest in the same businesses with a lot of conviction, you don't dilute your transaction fees, okay? More research on fewer stocks means higher results and less stress. Oh, this is a great point, because imagine you take the extreme example of having 5 stocks in your portfolio. Somebody that has 5 stocks in their portfolio, well, they have a strong confidence. They know a lot about these 5 businesses. They have done a lot of research. They know exactly what they're doing. So higher quality businesses, better valuation. They know exactly what they're doing. This is the reverse of ignorance, right? Who do you want to be? Do you want to be somebody with a lot of conviction or with somebody with a lot of ignorance? Choose your camp, right? I'm on a camp on concentration, definitely. I'm not saying you can't make any money with a diversified portfolio, right? I see the comments coming here. But I'm telling you, for a retail investor that doesn't have infinite time, if it's not your main job, you're not a professional money manager, concentration will help you on average, okay? You will have a better conviction, fewer ideas, higher results, and less stress because you will know exactly what you're doing. The solution is to shift from quantity to quality, to manage a concentrated, high-quality portfolio where you can buy stocks and hold for the long term. Buy high-quality companies with a great management team that you can hold for long term. This is how you can increase your odds of outperforming the market. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.